Thanks for joining me. This is Wayne, and I'm with Wayne's World, built by real estate. Well, today I want to talk to you about, are you ready to make that purchase? You've decided to buy a house, but can you do it? First thing everybody has a tendency to do is go out and start looking at homes. Well, that's not the best way to start. You could end up being very sticker shocked in regards to the fact that what you're looking at may be something you can't afford. First thing you should do is to go ahead and get pre-qualified. First step of that is to go out and talk to one or two lenders. You want to go ahead and shop around for lenders. There's many good sources in your local area or on a national basis. When you do decide to go with a lender, you want to know whether they're a lender who's going to ultimately service your loan, meaning you're going to make your mortgage payments in the future to that company. Or is it a broker who makes your loan and then turns around and sells it within the first month, maybe 2 months after the loan is made? The first one, the servicers type, they have a tendency to be a little bit more stable and you know what you're getting into. The brokers sometimes can get you into a loan and then you have to deal with whoever it is buys that loan and services it for you. Also, once you've picked out a lender, go ahead and just check out rates. You may want to also, when you're looking for lenders, look at rates, but it's not just the rate of the mortgage, not just the interest rate. Also compare what's called the APR, the annual percentage rate. The annual percentage rate will count in other fees and charges that the lender is charging you at the time they're making the loan, which is called origination, the time of the originating of the loan, which really just adds to the interest rate. They're fees that are profitable to the lender, whoever's making the loan, but they actually don't benefit you in the long run. It just actually increases their profit. Once you've decided who you're going to go with, you want to go ahead and start also thinking about what type of terms you want with that loan. Do you want a fixed rate loan, which is what most people today are doing? Interest rates are at historic lows, 2.5%, 3.5% for a good credit rating. You can go ahead and get those rates, which when it comes to an adjustable rate loan, you may start out low, but remember that rate can go up 5, 6, maybe 7% over its life. So if interest rates in the markets increase in 5 years, you may end up paying a lot bigger mortgage payment in the future. Also, you want to consider whether or not points make sense to you. What a point is, each point is 1% of the mortgage. If you're taking out a $100,000 mortgage, a point is $1,000. That point is usually made to pay down the interest rate on the loan. Think twice before you pay points. If you can get a loan that is slightly, 1/8 of a percent, maybe 1/4 of a percent cheaper just by paying a point, calculate out how much that you're saving each month and how much that point's costing you. Most of the time, it's a 5 to 7 year payback period when it comes to that on a point of a loan. Also, look at the different costs that the different lenders will charge you. There's certain ones that are normal, and you're going to have these no matter who you use, such as an appraisal, a flood certification, a survey, a tax service fee. There may be other ones also in your geographic area. Some cities and towns require town or municipal inspections of the home at the time of transfer. There may also be a fee by the homeowners association if you're going into one for the transfer, which a buyer's charged. Those are things that the lender can't always tell you, but that when you get out looking at homes, you'll be able to find a couple of those. Any costs beyond those, you want to think twice about what the cost is. A loan processing fee and some of these other fees. Those are fees that the lender's charging you. These fees add to the APR. They do not really benefit you as making the loan. It just adds to the profits of the company that's making the loan for you. And one of the things I wanted to mention too is regards to now that you've got these things in line and you've found a lender, do you have what it takes to settle on the home? We're going to talk about this later in another video, but once you've gotten pre-qualified, do you have the down payment? Do you have the closing costs so that you can make that loan and get to closing day? Well, thank you very much for joining me. Remember to like this video as well as subscribe so that we can keep giving you more in the future. Thanks.